Hello guys, welcome back to Triplet Equity Research Part 2. Today we are doing something I have been building towards for months. We are going deep, truly deep on what is arguably the most important investment thesis right now in the market. But before that, I must say that there are a lot of medical terms, a lot of difficult names, medicines, diseases, and I could potentially misspell or mispronounce those names because this is not the terms I am very much familiar with in my everyday talks. So please forgive me if I misspell or mispronounce anything. And with that disclaimer, please proceed. Before we go a single step further, we need to spend 30 seconds on this slide because it matters. This content is for educational and entertainment purpose only. I am not a licensed financial advisor. I am not registered with SEC. Nothing in this video constitutes financial investment, legal or tax advice. The opinions you hear are mine and mine alone. They can and will change as new data arrives. Investment involves risks. You can lose principles. The companies and instruments we discuss may go up, may go down, or may do nothing for years. Perform your own research, consult a qualified professionals before making investment decisions. Third-party data referenced in this report is used under fair use for commentary, criticism, and analysis. All data sourced from publicly available SEC filing, earning releases, and industry research. This is a research note, not a financial recommendations. I am not your financial advisor. This is for education. Do your own due diligence. Okay, you have been warmed. Now we can get into the substance. We are talking about Eli Lilly and Company. Ticker is LLY. And let me frame this for you right at the top because I want you to understand the magnitude of what we are looking at. As of May 2026, Eli Lilly has officially crossed 1 trillion market capitalization threshold. That makes it the most valuable healthcare company in the history of humanity, not just in the United States, in the world ever. Think about that for a second. 1 trillion. That is more than the GDP of Netherlands, more than Saudi Aramco at IPO, more than every other pharmaceutical company on the planet. And it has gotten here not by acquiring its way up, not by financial engineering, but by doing something genuinely rare in the drug industry, discovering a molecule that works better than anything else before it, and then scaling that molecules to the entire planet. The molecule, of course, is tirzepatide, the dual GIP and GLP-1 receptor agonist that powers both Mounjaro and Zepbound, the world's best-selling drugs as of quarter 3 of 2025, and the engine behind a revenue trajectory that has tripled in 3 years. So in this video, which will run in 40 to 60 minutes, we are going through the entire research report slide by slide with full analyst level commentary. We will cover the company's history, its business model, the financial, the pipeline, the manufacturing, competitive dynamics, the red flags you should absolutely need to understand, the investment thesis, price scenarios, and a monitoring checklist that you can use in every single quarter. This is the dashboard side. This is where I want you to stop, sit up, and really look at these numbers because they are extraordinary even by the standards of the best companies in the world. Let us go through them one by one. The market capitalization is approximately 1 trillion. We already talked about this, but I want to emphasize this again. In January 2020, Lilly's market cap was around 80 billion. That means in roughly 6 years, the company has grown approximately 12-fold in the market value. That is the kind of return that market makes careers and the retirement. In the financial years of 2025, revenue was 65.2 billions, up from 41% year or per year in financial year 2024. Let that number land. 41% revenue growth at a company generating at 65 billions annually. This is not a startup territory. This is not early stage pharma territory. This is a mature large cap company growing at a rate you typically see only in the best quarter of high growth software companies. But this is drug. This is the recurring prescription. This is fundamentally different kind of business. The quarter one of 2026 revenue was 19.8 billion. This is the most recent data points we have. Revenue jumped 56% over year in a single quarter. That means the acceleration is not decelerating. The growth rate is increasing. When a company of this size grows faster in 2026 than it did in 2025, this is a very significant signal. The financial year 2026 guidance revenue guidance is 82 to 85 billions. Management is guiding for another 25 to 30% revenue growth this year. That implies that they expect to add roughly 20 billions of new revenue in a single calendar year. For reference, that is more than total revenue of most Fortune 500 companies generate annually. The gross margin is 83%. This is the number I want you to understand from a business quality standpoint. 20 83% gross margin means that for every dollar Lilly receives from selling a drug, it gives 83 cents after manufacturing cost. Lilly's gross margin has expanded from 68 in 22 to 83 in 25. This is a 15% point improvement in 3 years. As GLP-1 produce, which carry the highest margins, become a largest share of the mix, these numbers should continue to improve. In 2025, revenue growth was 41% year over year. From financial year 20 to 25, Lilly's revenue has growth, grown as approximately 18% CAGR. This is the world class for any industry, let alone a 150 years old pharmaceutical company. The 50-week to 52-week high and lows was 1250 to 730. This is the trading range for Lilly shares over the past year. This is roughly 65% range. It tells you that this is a volatile stock. Volatility is fundamentally driven by quarterly data points, guidance commentary, and pipeline news. Long-term investors have historically been rewarded for holding through this volatility. Now, the thesis summary is that the most valuable healthcare company in the history, powering the global obesity and diabetes revolution, 60 to 60.5% US GLP-1 market share. ROC is approximately 40% plus. The ROC number is critical efficiency matrix. It means that Lilly is generating 40 cents of operating profit for every dollar of capital deployed in the business. This is world class capital efficiency. Apple runs at approximately 30% ROC, Microsoft at around 40%, Lilly in the same tier as the best business ever built. Let us keep moving. How did the company get to here? To understand where Lilly is going, you have to understand where it came from. 150 years of pharmaceutical leadership. I love this slide because it reminds you that Lilly is not a startup. This is not a company that got lucky. This is a company that has navigated existential crises before multiple times and come out stronger every time. Let us walk through the timeline. 1876, Colonel Eli Lilly founds the company in Indianapolis, Indiana. From the very beginning, the company's identity is built around something unusual for its time. Quality manufacturing control. Colonel Lilly was a pharmacist and Civil War veteran who was frustrated by the inconsistency of medicines available in this era. He founded that company on the one principle that drugs should be pure, effective, and reliable. That founding ethos, quality, and scientific rigor has persisted for 150 years. In 1923, Lilly becomes the first company to mass produce commercial insulins for diabetes. This is arguably one of the most important pharmaceutical achievements in human history. Before insulin, type 1 diabetes was a death sentence. Typically, within months of diagnosis, Lilly's commercialization of insulin saves millions of lives and begins a multi-generational relationship between the company and the diabetes community that continues to this day. 1982, Humulin, the world's first combinant DNA drug. At a time when genetic engineering was brand new science, Lilly partnered with Genentech to produce human insulin using recombinant DNA technology. This is Lilly's announcing to the world, we are a biotech company, not just a chemistry company. This decision to embrace molecular biology early, decades before it was obvious, is one of the foundation of Lilly's current competitive positions. 1995, Progenex became the world best-selling anti-septicants. For a periods in the 90s, Lilly's is essentially a two drug company, insulin and Prozac. This is important context for what comes next. 2002, patent cliffs, Prozac goes generic, and later Zyprexa. The anti-septocytic was Lilly's other major franchise faces massive government scrutiny. In 2009, Lilly pays a $1.42 billion DOJ fine, the largest criminal pharmaceutical fine in US history at the time, for off-label marketing of Zyprexa. Revenue collapsed. The stock is devastated. This is the crisis that forces the company into an aggressive R&D pivot. They have no choice. They have to innovate or die. The R&D pivot, fueled by pain and necessity. This is where ultimately produced trizepatide. In 2014, Trulicity, Lilly's first GLP-1 receptor agonist, approved for type 2 diabetes. This is the company's first foray into the incretin class, the hormone class that GLP-1 drug mimic. Trulicity becomes a meaningful commercial success, but more importantly, it teaches Lilly how to develop, manufacture, and commercialize GLP-1 injectable medicines. This is the training ground. In 2022, Mounjaro FDA approval for tirzepatide in type 2 diabetes. The surpass clinical trials so that tirzepatide is not just good, it is better than anything else in that class. The dual GIP and GLP-1 mechanism is genuinely novel and clinically superior to semaglutide, which targets only GLP-1. This is the inflection point. In 2023, Zepbound FDA approvals of tripaglycerol for obesity under the brand name of Zepbound. This is the commercial explosion moment. The Surmount trials demonstrated that tirzepatide achieved approximately 12% average body weight reduction in obese patients, compared to 40% for Wegovy. 60% point in a clinical trial. That is a canopy, not a gap. Revenue hits 65.2 billion. Tirzepatide become the world's number one selling drug by revenue, suppressing Keytruda, Marquis cancer blockbuster. In the third quarter of 2025, Orforglipron, the oral GLP-1 pill, files for FDA. The bottom of this slide give you three inherited advantages that competitor cannot easily replicate overnight. An $11 billion annual R&D engine, a $65 billion manufacturing build-out in progress, and a brand and regulatory moat built over decades of scientific excellence. Now, let us understand the business model. What does Eli Lilly actually sells? It has four pillars. Let us look in each of them. This is where Lilly's business model separates itself from what I call traditional pharma. Companies like Pfizer, Merck, and Abhay. Look at the positioning strip across top of the slide. Three buckets. Traditional pharma on the left, general primary care, diversified, lower growth, lower margin. Companies that sells into every disease category, compete on volume, and operate in the world of constant present clip anxiety. Lilly is in the middle. Specialty growth pharma, GLP-1 specialist, pipeline driven, 83% gross margin, greater than 40% ROC, best in class efficiency. And on the right, the market gap Lilly feels. The only pharma company with the world's number one drug and 60% market share in the fastest growing prescription drug class on the planet. Now let us go through that four pillar of the business. Pillar 1, the cardiometabolic, more than 60% of revenue. This is the engine. This is what makes Lilly what is today. Mounjaro, the triglyceride for type 2 diabetes, did $11.5 billion in 2024 alone. That single drug was more revenue than many entire pharmaceutical companies. Zepbound, that is tirzepatide for obesity, did $4.9 billion in 2024. Its first full year of commercialization, it is now significantly larger and growing faster. Foundayo, that is the oral GLP-1 pill, received FDA approval in April 2026. This is a massive deal, and I will spend significant time on it when we hit the pipeline slide line. The Retatrutide, the triple G, the triple agonist, is in phase 3. It targets GLP-1, GIP, and glucagon receptors simultaneously. Phase 2 data showed 28.7% average weight loss. That is the highest weight loss result ever recorded in the pharmaceutical clinical trial in the history of medicine. If that holds in phase 3, Lilly will have three distinct obesity molecules across three different mechanistic pathways. The underlying dual GIP plus GLP-1 mechanism, that is why triazepam is superior. GIP receptor activation improves insulin sensitivity and energy metabolism in ways that GLP-1 alone does not. This is not marketing story. This is biochemistry story. Pillar 2, Oncology, approximately 18% of revenue. This is Lilly's durable anchor franchise. Virginia, it is a CDK4/6 inhibitor that has become standard in care in adjuvant breast cancer treatment, meaning it has given after surgery to prevent recurrence. The 5-year disease-free survival data is exceptional. Virginio, the protected by patent through approximately 2033 in the US. In Luriano, the received that FDA approval in 2025 for breast cancer. This is the next generation of Lilly's breast cancer franchise. The Gyparcia. This is the chronic like I'm gonna cell lymphoma. It passes $600 million annualized run rate in just second year of commercialization. The oncology pipeline is deep. Acquisition of Ajax Therapeutics, Senstensa, and Orna Therapeutics bring the capabilities that could define the next decade. The pillar 3, immunology, the Tulge for 2 point approximately generate approximately $2.4 billion annually. Biosimilar competitors is emerging before to the 2030. The Omocop for growing is also a growing franchise. It is a compelling story. The Lebrikizumab, the inhibitor for Amtong Demesis, it approves the EU under the brand name of Ibglass with US launch underway. This goes directly against AstraZeneca and Sanofi's mega blockbusters. If it can carve out even 15% of the market, it is meaningful. Pillar 4, that is neuroscience. Kisunala received FDA approval in 2024. This is the first therapy in human history that has been shown to meaningfully slow cognitive decline early Alzheimer's patients by clearing lumps from the brain. The trial showed that 35% reduction in the spread of tau, the marker of the neurogenerations. This is real science. Lilly Direct is Lilly's direct to consumer pharmaceutical platforms that allow patients to bypass pharmacy benefits manager, the middle manager who extracts pricing concessions in exchange for formula replacement. This is a strategic hedge against PBM pricing special. Verve Therapeutic acquisition in 2025 bring gene editing capabilities specifically for base editing. One treatment potentially lifelong LDA management. This is the ambition. Site 1 Therapeutics targets chronic pain pathways. Chronic pain is a massive market with significant medical need. The overall picture is clear. Lilly is not one trick pony. GLP-1 is the dominant franchise, but there are multi-billion dollar revenue streams either established or in development that give the company illegitimate diversification. Now let us look at what all those translate to financially. The numbers here are genuinely remarkable. I call this the financial reflection slide because it tells the story of a company that went from a flat revenue growth for years to almost vertical trajectory. From $28.5 billion in financial year 2022 to $65.2 billion in 2025, that is revenue nearly tripling in 3 years. Let me go through the key numbers methodically. In 2025 revenue 65.2 billions, up 44.7% year on year. In quarter 4 of 2025 revenue approximately 60.5 billions, the quarterly run rate annualized to 66 billions, which means that financial year 2026 guidance of 82.85 billions represents meaningfully sequential acceleration. In financial year 2025 net income was $21.8 billion. For context, in financial year 2023, just 2 years earlier, the net income was 5.5 billion. So net income has roughly quadrupled in 2 years. That is the power of operating leverage. In financial year 2025, EBITDA margin was approximately 42%, up from 28% in financial year 2022. 14 percentage point of margin expansion in 3 years. That is what revenue scale does to high fixed cost business. The drug is already developed. The critical trial cost is already sunk. Every incremental prescription sold at 83% gross margin falls through earning at an extraordinary rate. Cash and cash equivalent approximately 3.2 billions. This is not cash rich balance sheet by any standard of Apple or Microsoft, but the important point is the trajectory. Lilly has been deploying capital aggressively into manufacturing and R&D, which is the correct allocation given that the revenue growth opportunity is in the front. In financial year 2026, EPS guidance was 63 billions, 50 to 55 billion dollar to non-GAAP, that is approximately 40% earning per share growth in single year. Look at the revenue trajectory for financial year 2022 through financial year 2026 estimate. This is almost perfectly exponential. 28 billions, 34 billions, 45 billions, 65 billions, now guiding for 81, 82 billions. If you have already been following Libby for the past 3 years, every single one of these numbers came in above what analysts modeled 12 months earlier. The detailed financial tables shows that gross margin at 68% from 2022 to 80% in 2024, 83% in 2025, projected approximately 82% in financial 2026. That slight dip expected in 2026 reflects the new manufacturing capacity is coming online. There is where some dilution effect during the ramp up, but the long run direction is up. The EBITDA margin is 28% to 42% in 3 years, targeting 44% in 2026, 22% in 2022 financial year, and 40% plus in financial year 2025. Estimated 48% in 2026. This is on its way to becoming one of the highest ROC pharmaceutical companies in the world. Debt to equity, debt to EBITDA 1.9 times in financial year of 2020, down to approximately 1.0 times 8 in financial year 2025, targeting 0.8 times in 2026. The company is rapidly deleveraging. This is strong signal in financial health. R&D spending has 7.2 billions in 2020, approximately 11 billions in 25, and estimated 13 billions in 2026. They are spending more in absolute terms of R&D in every year, which is the correct behavior given that pipeline proportionality ahead. The financial profile: high growth, expanding margins, world class ROCE, deleveraging balance sheet, and increasing R&D investment. It is extraordinarily rare. This is the profile of a company in the middle of generational product cycle. Now let look us what is next, the pipeline. Because Lilly's current products are on the whole story, not even close. This is the slide I find most exciting because it tells you that Lilly is not just harvesting today's success, it is effectively building for next wave. Let me go through the each of the pipeline asset. That found IO approval approved in April 26, status is commercial. Let me spend extra time here because this is genuinely transformative. Orforglipron is a small molecule of GLP-1 receptor agonist that can be taken as an oral pill with no food, no restriction, water restriction. Let me explain why this last part matter. Because current GLP-1 drugs, Ozempic, Wegovy, Mounjaro, Zepbound, all are injectable. They are weekly subcutaneous injections. This is meaningful segment of the patient population that will not self-inject, that fears the needles. They forgot. They do not want to deal with the storage requirement and temperature control. The barrier is real and it is large. Previous oral GLP-1 attempts, specifically Novo Nordisk's Ribelosas, requires patients to take the pill on an empty stomach, which only 4 ounce with only 4 ounce of water, and then wait 30 minutes before eating or drinking. Compliance was poor, the absorption was inconsistent. The found IO Orofilcon is truly convenient oral pill, no food restriction, take it whenever. The clinical data shows approximately 60% body weight reduction and meaningful A1C improvements and in type 2 diabetes. Approval came in April 2026. This is the first truly unrestricted oral GLP-1 available commercially. The market implication: there are hundreds of millions of people globally who could benefit from GLP-1 therapy but who face barrier to injectable treatment. The oral pill removes those barriers. This is a potential tenfold expansion of the addressable market over 5 to 10 years horizon. Retatrutide phase 3 of NDA filing expected in quarter 3 and quarter 4 of 2026. This is this is the one that genuinely keeps Novo Nordisk executive awake at night. Retatrutide is a triple agonist. It targets three receptors simultaneously: GLP-1, GIP, and glucagon. The glucagon agonism drives fatty acid oxidation. Essentially, it tells the liver to burn stored fat for energy, which adds an entirely new mechanism on top of that GLP-1 effect. Phase 2 clinical trials showed that 28.7% average weight loss over the approximately 48 weeks. The 28.7%, this is not a typo, for a patient weighing 250 pounds, that is 72 pounds of weight loss on a drug without surgery. For comparison, bariatric sleeve gastrectomy stomach surgery typically achieves 25 to 30% excess weight loss. Retatrutide is approaching surgical level of weight reduction in pharmaceutical format. No competitor has a comparable molecules in late stage development. In phase 3 data holds and the safety profile is acceptable, which is the critical condition. Lilly will have three distinct obesity molecules: Zepbound for the general market, Found IO for the oral convenience market, and Retatrutide for extremely efficacious, which where maximum weight loss is the clinical priority. Zepbound label expansions, NDA expansion ongoing. Trijapadise is being studied and approval for an expanding list of conditions. Obstructive sleep apnea already approved in 2024. This is significant because the treatment for sleep apnea is currently a CPAP machine, a device that millions of patients find uncomfortable and non-compliant. If tetracycline can replace or reduce CPAP dependence, and the addressable population is enormous. Heart failure with preserved injection fractions. Clinical data shows is compelling. This is form of heart failure affecting roughly half of the all heart failure patient with very limited pharmacological treatment options. The mass liver disease linked to obesity and insulin resistance. Trizapatide reduce liver fat in clinical trials. This is a major unmet medical need. Lilly is effectively turning tirzepatide from a weight loss drug into a multi-system metabolic platform. Each new label approval opens a new patient population and potentially expand to the pharmacy commercial life of the asset. The Kinsula approved and expanding for Alzheimer's disease. First drug to genuinely slow cognitive decline in early Alzheimer. The Trailblazers Alzheimer 2 data. 35% showing that cognitive decline in patients. The caveat is related imaging abnormalities, essentially brain swelling and microbleeding, is a real side effect that limits uptake to carefully screened patient population. This is a medical supervision drug, not a general population drug. But the Alzheimer's TAM is staggering: 65, 50 to 60 million people with Alzheimer's globally, with a peak US sales opportunity estimated at 5 to 10 billion dollars annually, is prescribing borders. You approved Levodopa atomic dermatitis. EU launches are underway, going head to head with Dupixent, a found $14 billion drug from Sanofi and Regeneron, specifically rather than both IL-4 and IL-13. Whether that narrows targeting provided clinical advantages in certain patient subpopulation in the key commercial is the main question. The EU approved it and the US launch has begun. Olomorasib phase 2-3 of correct and for lung and colorectal cancer. KRAS was considered undruggable for decades. The first KRAS inhibitors were approved around 2021. Now the race is on the combination approach. Lilly's combinations of oncology approach is KRAS G12C muted lungs and col- colorectal cancer is an important pipeline bet on the next generation of oncology. The gene medicine platform, Vera Therapeutics acquisition bring base editing technology. The Lebanon, Indiana gene medicine plant opened in May 2026 is that long-term optionality play. RNA therapeutics and gene editing represent the next paradigm shift in medicine, and Lilly is positioning early. The pipeline is extraordinarily deep. There are approximately 40 active clinical programs. This is not a one molecule vendor. This is a platform. But pipeline dreams only becomes revenue if you can actually manufacture and deliver the drugs at scale. And Lilly has that been supply constraint. Let look us now how they are solving that. The single most important risk that almost derailed the GLP-1 story for Lilly in 2023 and 24 was not clinical. It was not regulatory. It was manufacturing. They could not make enough drug to meet the demand. Zepbound was on the FDA drug shortage list. The patients were turning to compounding pharmacies. Novo was gaining share simply because it had more physical supply. Lilly's response has been one of the largest manufacturing investment program in pharmaceutical history. $65 billion commitment. Let me walk through you the sites. Indianapolis is Indiana, headquarter and legacy site. The original facility, insulin history, biotech history, still important but not the primary growth capacity. The New Jersey $5.3 billion expansion. This is the primary triptazide active pharmaceutical ingredient site. The API is what defines your supply capacity. Branch drugging is coming online in 2025 and 2026. This is the key supply unlock. Lebanon, India, $4.5 billion. Opened in 2024 with the gene medicine facility added in May 2026. This is the Lilly's showcase site. Small molecule manufacturing, biotech capabilities, now genetic therapies. Purpose built for the next decade of that pipeline. Research Triangle, North Carolina, 1 billion plus, focused on oral delivery and advanced manufacturing. Found is oral formulation found may be processed here. The Germany 2.3 billions. EU manufacturing for injectable GLP-1 drug. This site addresses European supply and reduces the geopolitical constraints risks of manufacturing only in the US. Limburg, Ireland, 1.6 billion. Ireland is a well-established pharmaceutical manufacturing hub with favorable tax treatment. This expand Lilly's European capacity further. The key point is 75% of Lilly's manufacturing capacity is in the US and Puerto Rico. This provides partial protection against potential pharma import traffics, a watchlist item we will discuss in the risk section. Now the geographic of revenue split. United States 64% of revenue, approximately $41.7 billion. Europe 15%, approximately 9.8 billions. Japan 6%, approximately 3.9 billions. China 7%, approximately 4.6 billions. Note that Mounjaro launched in China, but NRDA, the National Reimbursement Drug List pricing negotiation have cut the price. Volume is growing, net revenue impact is mixed, rest of the world is 8%. The US dominance 64% is double-edged sword. On one side, the US's whole GLP-1 pricing is highest, where Medicare coverage expansion and July 2026 represent a massive volume catalyst. On the other side, US policy risks around Medicaid rollback and IRA price negotiation in concentrated and material. The regulatory and geopolitical risks watch on the right side of the slide deserve close attention. There are four items. High risk, high severity is US Medicaid obesity coverage rollback. California government removed Zepbound from medical. Multiple states considering similar cut. This is a real headwind to volumes in lower income population. Medium severity pharma import traffic proposal. The Trump administration has proposed a significant traffic on tariff on pharmaceutical imports. Lilly's 75% US manufacturing provides a partial shield, but 25% outside of US exposure means that this is not a zero impact scenario. The medium severity is IRA drug pricing negotiation. The Inflation Reduction Act subject drugs to Medicare price negotiation after 9 years of commercialization of small molecules. Mounjaro or Zepbound are tripeptide-based small molecule product. They could enter negotiations as early as 2031. This is a long-term margin headwind that investor in Nilis should need to model. Watch out. EU AI Act and GXP regulation. Lilly is using AI and drug discovery. EU data privacy regulation is evolving. This is low profit probability, manageable risk, but worth monitoring. Now let us look at how Lilly competes. Who are they up against and why are they winning? The competitive slide here is where I want to be very precise because the narrative around Lilly versus Novo Nordisk is one of the most important stories in global pharma. Let me go through the comparison table first. Eli Lilly ticker Lilly has a revenue of 65 billions, forward PE approximately 30x, GLP-1 position leader, dual GIP plus GLP-1, key moat is pipeline depth plus oral GLP-1 plus manufacturing scale. Novo Nordisk ticker Novo revenue is approximately 45 billion, forward PE approximately 22x, GLP-1 position is challenger, semaglutide based key mode is scale, Alzheimer and Wegovy brand recognition, strong global distribution, particularly in Europe, where Novo Nordisk has decades of diabetics relationships. Important note on Novo Nordisk are they are guiding the revenue down for 2026, negative 5 to 13% year-on-year growth. That is extraordinary. The company that invented the modern GLP-1 market is now losing US market share very fast enough to sink its total revenue. That tell us everything about the magnitude of Lilly's competitive advantage. Pfizer ticker FPFE revenue approximately 63 billion. Forward P approximately 12x. GLP-1 is competitor. The Donoglypron in phase 3. Key mode is scale, but early stage GLP-1 is pipeline rebuilding after Paxlovid revenue cliff. Pfizer is not near-term GLP-1 trade. AstraZeneca revenue approximately for 54 billion. Forward P approximately 8x. GLP-1 position is minimal, indirect. Key mode is oncology and CVRM franchise. No obesity plan yet. Roche ticker is RHHBY. Revenue approximately 60 billion. Forward P approximately 17x. GLP-1 position is entrant. CT996 in phase 2. Key mode is diagnostic plus oncology. Now let us go through the three competitive insight boxes at the bottom of the slide. These are critical. Box 1 is clinical superiority. The Surmount 5 head-to-head trial, which is first direct comparison between tirzepatide and semaglutide in the obesity population. Tirzepatide shows 20.2% body weight reduction versus 13.7% is Wegovy. That is 6.5% point gaps. When a prescriber sees that kind of a trial data, the prescribing decision is very clear. Tirzepatide works better. Clinical superiority drives formulary positions. Formulary position drives prescription volume. This is a durable mode. Box 2 is oral GLP-1. Fast mover. Fundeo Orforglipron is the only approved oral GLP-1 pill with no food or water restriction. Novo Nordisk's oral semaglutide exists, but the compliance requirement limits its real-world efficiencies. In markets where cold chain distribution of injectable is impractical in rural India, sub-Saharan Africa, larger parts of Southeastern Asia, an oral pill changes the access equation entirely. The global TAM for an effective, convenient oral GLP-1 is not 50 million patients; it is hundreds of millions of patients. Box 3 is Retatrutide mode. If Retatrutide achieves approval with its 28.7% weight loss profile, no competitor has a comparable triple agonist molecule in late stage development. This exactly Lilly's premium positioning for potentially 5 to 7 years beyond the current tripartite cycle. The key takeaway from this competitive analysis: Lilly is not just winning today competition, it's building structural advantages that will be increasingly hard to close. But I am also a skeptical analyst by training. And no matter how good a stock looks, you have to force yourself to look at what could go wrong. Let us look at the red flags. This is the slide that separates a research note from a promotional piece. Every great investment has a risk. The question is whether you understand them clearly enough to seize your position appropriately and to know what news flows would change your thesis. Let me go through each of the risks with full transparency. Risk 1 is GLP-1 pricing and IRA Medicare negotiation. Critical severity. The Inflation Reduction Act is one of the most significant structural changes to the US pharmaceutical pricing environment in a generation. Under the IRA, Medicare can negotiate prices for drugs that have been on the market for 9 years, small molecules in 9 years, biologics in 13 years. Tirzepatide is a small molecule. It was first approved in 2022. That means it could enter the Medicare negotiation cycle as early as 2031. If tripartite is selected for negotiation, the price reduction could be 30 to 60% or more. The Congressional Budget Office has estimated that the first 10 drugs selected for negotiation will see price reduction averaging around 40%. For context, if tripartite generates $40 billion revenues by 2030 and then faces a 40% price cut in 2031, that is $16 billion of annualized revenues that simply disappears. The PBM, Pharmacy Benefit Manager, rebates pressure in an additional near-term pricing headwind that is already compressing net revenue per prescription. This is the single most important long-term financial risk to Lilly. This is not an if it is when. Manufacturing execution risks. Severity is critical. Lilly was on the FDA drug shortage list for Zepbound in 2023 and 2024. When you are a drug company with a 60% market share in your primary market and you cannot fill the prescription, patients switch to competitors. Prescribers switch formulary preferences. Brand loyalty erodes. The $65 billion manufacturing build out is the correct response, but it is a massive, complex, multi site executional challenge. Construction can be delayed, regulatory approval for the new facilities take time, equipment installation validation takes time. Any meaningful delay in Branchburg or Lebanon coming to full capacity could reopen the supply gap in 2026 or 2077. I want to be very direct. $27 billion of capex is committed in 2026. That is the largest annual capital deployment in Lilly's history by any significant margin. Executing a capex program of that scale while simultaneously growing revenues at 30% per year is genuinely difficult. Management credibility depends on delivery. The risk 3 is Alzheimer's regulatory and safety risks. Risk severity is high. Crisuna, the genuinely imported drug, but AIRA amid amyloid related emerging abnormalities, it is a real safety concern. ARIA manifests as brain swelling or microbleeding in the subset of patients, particularly those who are APOE4 carries. In the Trailblazer ALJ2 trial, a small number of patients experiences serious ARIA events, including fatalities. This is not a disqualifying risk. It is a manageable critical clinical risk, but it limits prescribing to patients who cannot can be properly monitored and screened. The lesson from Leqembi, Biogen, and ISA similar Alzheimer's drugs is instructive. Leqembi was approved, had a very similar safety profile, has been commercially disappointing because the label criteria, monitoring requirement, and physical reluctance to use it have constrained uptake. Crinsunsola faces the same dynamics. Oral GLP-1 competitors entry severity is high. Founders Founders approval in April 2026 gives Lilly a meaningful head start in oral GLP-1, but this is a race, not a monopoly. Novo Nordisk's oral Wegovy launched in 2026 January. Before Foundayo, it showed approximately 15% weight loss in trial. That is below Orofingol 16%, and it has food restriction, but it exists. It is on the market, and Novo has decades of prescribers relationships. Pfizer Dangulefreon is in phase 3. Chinese pharmaceutical companies are also developing multiple oral GLP-1 candidates at significantly lower cost structure. The oral GLP-1 market will not be monopolized by Lilly forever. The first mover advantage is real and valuable, but it has a time limit. Risk 5 is valuation multiple compression. Severity is high. Lilly trades at approximately 45 times forward earning as of May 2026. This is a technology company multiple applied to a pharmaceutical company. Gross stock valuation of that kind has carries a enormous fragility. A single bad quarter, a miss on revenue guidance, and a supply disruption announcement A Retatrutide will phase 3 disappointment can cause rapid and severe multiple compression. Novo Nordisk fails approximately 50% in 2025 on a single guidance cut. That was Novo's first significant earning miss in years, and the market reacted by repricing the entire GLP-1 category. Lilly is not immune to that dynamic. If Lilly's forward P compresses from 30 times to 18 times, which is close to the pharmaceutical sector average, then that alone represents approximately 40% downside from the current price. Even if revenue growth continues, the patient cliff exposure, that is 2026 to 2030, is severity is medium. Trulicity losses US patient exclusivity around 2027. That is a multi-billion-dollar revenue headwind. Talch faces biosimilar entry before 2030. Virginia's Plabosys competitor is already facing generic entry. Trizepatide's core patients run to approximately 2036, which provides the primary protection window. But legacy drugs creating revenue headwinds will compound to the burden of replacement. The compounding pharmacy disruption severity is medium. During the shortage period, compound pharmacies produce semaglutide and tirzepatide at approximately 19% lower cost than branded drugs. The FDA has begun enforcement actions against compounders as supply normalized, but the compounding issue has raised patient awareness about pricing. Any future shortage or any further FDA determination of drug availability could reopen the compounding market and damage brand pricing power. Risk 8 is geopolitical and global pricing divergence. CBAT is watch. GLP-1 drugs are priced 5 to 10 times higher in the US than Europe or Japan. International revenue growth requires either accepting lower price point or waiting for price convergence. That may never come. Political risks around drug pricing headline is a persistent overhang. This is the full red flag inventory. I want to be clear, none of those risks individually is thesis destroying, but you need to be understood, modeled, and monitored. Ignoring risks is how investigation gets investors get hurt. Now that we have looked honestly at the risks, let us build the investment thesis. What must you believe to own that stocks? I structure my investment thesis around the concept of necessary beliefs. Every investment thesis has a set of propositions that must be true for the thesis to work. If you cannot honestly say you believe these things, you should not own the stocks, regardless of how good the narrative sounds. For Eli Lilly, there are three core beliefs that must hold simultaneously. Belief one is GLP-1 demand is real, structural, and will grow for decades. If true, 1 in 8 adults globally is obese by WHO classification. US obesity prevalence is approximately 43%. Medicare coverage expansion in middle 2026 adds 7 million to new eligible patients. GLP-1s are demonstrating critical efficiency across cardiovascular diseases, sleep apnea, NASH, arthritis, and early signals in Parkinson's and addiction. The addressable market is $42 billion today and projected to reach 187 billion by 2032 at approximately 17% compound annual growth. Tirzepatide has been compound superior in portfolio of more than 15,000 patients across clinical trials. If false, the DeepSeek analogy applies here. If future oral GLP-1 pills from Novo, Pfizer, or emerging Chinese competitors achieve comparable efficiency to tirzepatide at dramatically lower cost, pricing power could collapse across the category. If the cardiovascular outcomes data from tirzepatide large select equivalent trial disappoints, new label expansion stalls, and volume growth assumptions are too aggressive. Volume without pricing equals margin compression, which means the current earning multiple is unsustainable. My belief is that I believe one is highly likely to be true. The structural obesity demand is real, the multi-indicator expansion is underway, and the market penetration rate among eligible patients is still in the low single digits globally. There is an enormous runway. Believe too, Tirzepatide's clinical superiority creates a durable approximately 60% market share. If true, 20% versus 14% weight loss is 6 percentage points of superiority over Wegovy is clinically meaningful and drives prescribing decisions. 60.5% US share gains in 24 months against a competitor with a 10-year head start is structural evidence of superiority. Patient switching rates are low once outcomes are achieved. Tirzepatide works well enough that patients do not want to switch. Foundayo removes the injection barrier for the next range of patients. If false, Novo's oral Wegovy launched in January 26 shows 15% weight loss, only 1 percentage point below Orforglipron's 16% signal. If oral format commoditizes the GLP-1 class and price becomes the primary differentiator, Lilly's premium pricing erodes rapidly. Novo's Cargisema combinations produced in phase 3 shows greater than 25% weight loss. If approved, it could rival tetratrutide and challenge the superiority narratives. Belief 2 is likely true in the medium term but faces the highest risks from oral competitions. The head-to-head superiority data is locked in and will drive prescribing for years. But the 3 to 5 years oral market dynamics is the key variable I'm watching most closely. Belief 3, the premium valuation is warranted and will sustain as pipeline delivers. If true, 30 times 30 times forward P is earned when revenue is growing at 25 to 45% annually. Gross margins are 83%. ROC is 40% plus. And you have three pipelines options: Orforglipron, Retatrutide, Crisumzula, that are valued at zero in current financial model. Historical compounders like Microsoft or Apple sustain 30 times plus valuation for over a decade when fundamentals supported it. Pharmaceutical IP has longer legal protection than software. Lilly is more capital light than semiconductor companies. If false, Novo Nordisk trades above 30 times P in 2024, fell 50% in 2025 on a single guidance cut. Lilly is not structurally protected for similar repricing. If Orforglipron fails to capture expected market share, if Retatrutide phase 3 data disappoints, or if Alzheimer's stalls, the stocks could compress to 15 to 18 forward PE, which is the pharmaceutical sector average, implying 40 to 50% downside from current level. My view, belief 3 is where I have been most analytically tension. The premium valuation is currently earning from fundamentals. It but it has essentially zero margin for error. A long-term investor with 5 to 10 year horizons can tolerate the multiple compression risks because the fundamental earning power should compound through it. A short-term investor cannot. Now let's look at the price target for this. What it looks on the different scenarios. The bear case from current percent, it is 37 to 44% downside, that will be 500 to 600 range. What kills the bear case is Orforglipron fails to win meaningful market shares. Prescribers do not switch to oral because injectable tight outcomes are already excellent and the new patient incremental is smaller than modeled. Retatrutide phase 3 missed on efficiency or so unacceptable safety, eliminating the next generation pipeline optionality. Kagisema from the Novo wins the weight loss efficiency race. US government pricing deal expand to all GLP-1 Medicare drugs. Not just this deal, but a broader pricing framework. Tariff driven COGS price erodes to 83% gross margins. The market re-rates from 30x to 18 or 22 forward P implies is 2026 revenue in the BR will be 65 to 17 billions. The underlying business does not collapse, it simply stopped growing as fast as the market expected. The base case target will be 950 to 1100, that is 19 to 38% from current. What delivers the base case is financial year 2026 revenue guidance of 80 to 83 billions is achieved. Orforglipron FDA approves outcomes on schedule in 2026 quarter 2, begins ramping prescriptions. US Medicare obesity coverage begins in July 2026 and adds meaningful patient volume by year end. Market share holds at 60% plus versus Novo. EBITDA margin expands to 44% to 46% on operating leverage. Kitsunla reaches 3 billion plus by financial year 2026. The stocks re-rates modestly on 27x to 30x forward P. The bull case. Price targets will be 1300 to 1500, that is 22 to 41% from current scenario. What delivers the bull case is Retatrutide phase 3 showed more than 25% weight loss, establishing it as the most effective obesity drug in history. With NDA filing from Q3 to Q4 in 2026, in Lurio, Alzheimer's approval adds a genuinely new $10 billion plus peak sale opportunity. Orforglipron dominates the oral GLP-1 market, globally expanding the addressable patient population to over 200 million eligible patients worldwide. US, UE, Japan oral GLP-1 coverage frameworks accelerate faster than expected. Lilly's enterprise value relates to platform multiple like Microsoft software platform or Apple's hardware plus service platform, pricing in the optionality of being the dominant provider in the largest medical market in the 21st century. Revenue trajectory confirms 150 billion by 2030. But price targets are only useful if you know which data points are going to drive the stocks. Now let us talk about what to watch. The slide gives you the approximately context in numbers. Current price is approximately 1065, market cap is 1 trillion, trailing P on 2025 actual are approximately 46x, forward P is 28 to 30x on 2026. The consensus 12-month price target is 1200 and the highest analyst price target is 1500. The PR comparison, Eli Lilly forward revenue multiple 8.5x estimated 2026 revenue. Novo Nordisk forward revenue multiple approximately 4x, trading at a significant discount to Lilly because the market is pricing in the US share market share and revenue decline. AstraZeneca is approximately 5x revenue multiple, growing at a single digit rate. Lower multiple reflect lower growth. Pfizer approximately 2.5x revenue multiple, rebuilding pipelines after Paxlovid cliff. The key valuation insight in the bottom of the slide is the most important thing I can tell you about Lilly's valuation. Lilly trades at approximately 2x of Novo Nordisk's price to earning multiple. That premium reflects tirzepatide's clinical superiority, Lilly's fast mover advantage in oral GLP-1, a stronger pipeline with more optionality than the Retatrutide call options that no competitor can match. The premium is justified if the financial year 2026 guidance of 82 to 85 billions is achieved and Retatrutide advances cleanly. A miss on either, especially supply constraint persisting IRA pricing pressure intensified, could compress the multiple back to 20 to 22x, implying a 25 to 30% downside. The revenue projection trajectory from 81 billion in 2026 to 150 billion plus by 2031 is approximately 13% CAGR. Terminal growth rate is 3.5%. WACA is 8.5%, terminal EBITDA margin is 48%. The DCF produced a value range of approximately 950 to 1150 per share. The bull scenario, oral GLP-1 platform plus uh, Alzheimer success pushes that to 1300 plus. Now the practical investing section. What exactly do you track every quarter to know whether this thesis is on track or it is breaking down? This is the slide I recommend every Lilly investor SEBS review before every quarterly earning call. The quadrant 1 is quarter 2 and quarter 3 2026 earning metrics. Revenue versus to 21 to 23 billions in quarter 2 consensus. Is this the first half accelerate on track for 82 to 85 billion full year? Mounjaro or Zepbound volume growth are supply constant, easing quarter by quarter. Shortage notification decline is the metrics to watch. Foundio uptake data, is this the most important new data point for 2026? How many patients are starting Orforglipron in quarter 2, the first full quarter of commercial availability? Any early real world prescription data in the major catalyst? Non-GAAP gross margin targeting 83 to 85% in 2026. If gross margin dips below 80%, it signals either manufacturing ramp cost or pressure pricing. Both are negative signals. Full year guidance reiterated or raised, guidance raised is a strong positive re-rating catalyst. Any guidance reduction or removal triggers the Novo style sale of bricks. The quadrant 2 pipeline monitoring. The Retatrutide NDA filing timeline. Quarter 3 to quarter 4 2026 is expected. Any acceleration or delay in the filing is a major stocks mover. The Retatrutide phase 3 safety data, any adverse evidence signals AI, ARIA like issues, gastrointestinal tolerance above triglycerides would be a thesis risk. The Kisuna global rollout, prescribers adoption curve in EU and Japan. If the Alzheimer's franchise is stalling, it removes a key bull case pillar. Lebrikizumab versus Dupixent. Market share in atopic dermatitis. Early market share data in the US is key. Generic medicine program milestones at Lebanon advances therapeutic plans. Any phase 1 readout is early stage optionality data. As the active pharmaceutical site construction milestones at Lebanon on track for 2027 commercial productions. Zepbound and Mounjaro supply situation, shortage notification decline, wholesale channel inventory levels normalizing, compounding pharmacy legal status, FDA enforcement effectiveness. If compounders continue to operate despite Lilly's winning injunctions, pricing and brand positioning remain compromised. International markets entry pace, EU and Asia Zepbound approvals. Early new market approval is a volume medicine. Capital deployment efficiency, that is 27 billions of capex commitment in 2026. Revenue of output per capex dollar is the efficiency matrix to track. The IRA negotiation, is Trigepadite selected for Medicare price control. Any announcement here is a major negative analyst for regulatory and policy watch list. Medicare Part D obesity drug expansion, congressional progress on full implementation, FDA found additional indicators, diabetes approval to complement the obesity approvals will significantly broaden the prescribing base. Trump administration drug pricing policy executive order risks for unilateral pricing actions. The critical near-term catalyst is Q2 2026 earning expected around August 2026. This is the first time we see real Foundao revenue data. This is also the first earning call where management will give initial colors on the Retatrutide filing timeline, and it is when we will know whether the manufacturing ramp is proceeding fast enough to hit full year guidance. That earning call is the most important single data for Lilly investor to watch in next 6 months. This is the real one slide version of everything we have spent in the last 1 hour. If I could only show this one slide about to Lilly investor, this would be it. One line thesis. Eli Lilly owns the most differentiated GLP-1 molecules in medicine, Trizepatide. It's deployed a 27 billion manufacturing fortress and carries a pipeline with them donanemab, orforglipron, and oncology depth that could sustain 20% plus top-line growth through to 2030. Unlike Novo Nordisk, which is dependent on a single GLP-1 mechanism and is losing US market shares, Lilly Streptozide achieves superior efficiency, efficacy via the dual GIP and GLP-1 mechanism. So that this is makes make it different. Unlike Pfizer or Merck, which are still $45 billion revenue companies growing at a single digit, Lilly is at $65 billion growing at 40%. Unlike any competitors, Lilly combines GLP-1 category leaders with genuine Alzheimer's and oncology optionality. The breadth and depth and quality of the franchise is genuinely unprecedented. What we like is 27 billions of GLP-1 revenue in 24, growing at 90% YOY. The Doneba could unlock 5 to 10 billion in Alzheimer's revenue. Oral GLP-1 could multiply the addressable patient population by 10x. 27 billions in US manufacturing investment creates a supply moat. 50 plus pipeline molecules provide next decades of growth runway. What worries us is the valuation of price near perfection at 45 forward earning of as of May 26, manufacturing ramp in the number one near-term execution risk. Any delay compounds through the revenue model. IRA price negotiation threats long-term margin profile after 2031. Donamembe has binary FDA approved dynamics and ARIA side effects risks that limits commercial upscale. The GLP-1 discontinuation data, the subset of patients who stop taking GLP-1 drugs and regain weight, could challenge payers' coverage mandates if health outcome is not durable. The price target range BR case is 480 to 580. Execution fails or IRA pricing shock. Base case is 900 to 1100. Guidance execution 11x to 14x price to sell to re-rate. Bull is 1300 to 1600. Oral GLP-1, Donanaba, the triple agonist all succeeded at hyperscale. This is the full research note on Eli Lilly and Company. Let me give the 5 sentence version of everything we covered today. 1. Lilly owns the world's best-selling drug by revenue, Trizepatide, which an annualized run rate approximately 40 billions and 60 billion, 60% market share that is still rising quarter on quarter. Number two is the pipeline is extraordinary. Foundayo brings oral GLP-1 to hundreds of millions of patients who could not self-inject, and Retatrutide has the potential to be the most effective obesity drug in the clinical history if phase 3 data holds true. The number three is the financial profile: 41% revenue growth, 83% gross margin, 40% ROCE, rapidly expanding net income is the one of the best in global market today in any sector. Number four, the foundation at approximately 30x forward earning, 1 trillion market cap, price a gator deal of this. You are paying a premium for a premium business. That premium compresses fast if guideline is missed or pipeline disappoints. Number five, for a long-term compounder investors with a 5 to 10 year horizon, someone who can hold through quarterly volatility and multiple compression events. Lilly represents one of the highest conviction large cap opportunities available globally, grounded in structural demographic demand, clinical superiority, and a pipeline depth that no competitor can match today. This is not a comfortable valuation, but history rewards who buys great businesses early in generational product cycle and hold. We are, I believe, still early. Do your own research, consult a qualified financial professional. But if you found this analysis useful, please like the video, subscribe to the channel, and leave your thoughts in the comment section. What is your view on Lilly? What readings I am missing? What data points you are watching most closely? Thank you for spending the last hour with diminished equity research. We will see you in the next one. Have a nice day.